Hello and welcome to today's video in high altitude investing. Today is episode 75 of the Craving Crypto podcast, and we're going to be talking about Bitcoin might be bottoming, but should you invest yet? So let's get right into this. So before we get into the charts, let's get into the total market cap technical analysis, and then we can go into the Bitcoin stuff as well. So this is the total market cap on the logarithmic chart, starting from pre-2014, somewhere around in May of 2013 is when this chart really starts, where you get this parabolic run up, and then you have a descending resistance line right here, which we broke above, and then the bull market starts again. And so if we take our line tool and draw from the peaks down, we have another descending resistance line currently that I would love to see us break above to really confirm that we're going to see more upward movement to come. The MACD on the weekly time frames is well into oversold territory and crossing, so this is a good sign as well for the big picture bullish analysis for the total market cap. We also have a volume spike that's been coming in that exceeds the volume that we had during the sell-off. So as you can see, from about here to here, we had a pretty big declination in volume. As you can see, volume dropped significantly. And now that we are reaching these lower support levels on the total market cap right here, these support levels that used to be resistance, here's another one that we could test if we have a support failure right here. We're starting to get that increase of volume again, which is a good sign. If we get a successful break above this level right here, if we can successfully get above this level, that downtrending resistance line, and we get another spike in volume, I will be looking to see another trend similar to what happened right here come into the total market cap in the cryptocurrency space. So that would be really exciting if we can get that breakout of that downtrending resistance channel. And we just really want to see the volume continue to increase as we reach these resistance levels. Now, it wouldn't surprise me at all if we do get a breakout in that descending resistance. The reason for that is because from a fractal perspective, meaning that this cycle is fractal in nature, it looks very similar to the previous cycle. We can take our price range from the top down. There's an 80% drop. And then we can take our price range from this peak down as well. And you can see that we had an 87% drop in value on that one. This gives us a comparison of the cycle that we had previously to the cycle that we see today. And if we take our Elliott wave tool, we can draw a nice A, B, C. And then we can also take our Elliott wave tool and draw a nice A, B, C. This bear market was essentially the exact same pattern that we're seeing in this bear market here. Now let's check out our top mover for the day. Our volume is at 24 billion, and in the last episode we were over 30 billion, so I would like to see that increase again. Bitcoin dominance has been slowly dropping off from the 54% range over the past couple months, and we are down to 51%. That is a good sign because altcoins have dropped significantly from their peaks. They are a lot more undervalued as far as percentage goes than Bitcoin, so they're starting to get some of that dominance back into the altcoins that we lost over the correction. Clicking on the 24-hour change, our top mover is Aurora, so let's do some analysis on that. Aurora is also going to have the same downtrending resistance point, but as you can see, we started to get a break above that downtrending resistance with Aurora, and we do have a significant increase in volume in comparison to what was happening during this huge sell-off from the peak down to over here. We started to pick up in volume as we reached the previous all-time low that it hit right here at around 0.009 cents. So if we really get significantly above this resistance line, meaning that if we can get a close above that resistance line, a green candle to come up like this, then it would be a great spot to buy on any type of a retracement before it pushes higher, because this downtrending resistance has been pretty significant through its cycle when it was added in July of 2018. The volume on Aurora in this area is in the millions. We are talking about 2.6 million, 1.9 million, 3.2 million, which is similar to the volume that we saw when it got added to the exchanges first. but it's not quite as high. This was a $7 million spike, and then after that we started to see the similar volume that we're experiencing now in the $1 to $3 million range. So this whole period through September and December was dead volume in Aurora, but now that we're back down to these lower support levels over here, it's starting to pick back up in that volume. So that's a good sign for the bulls as well. Okay, enough about the coin market cap charts. Let's go ahead and check out our Bitcoin analysis. Today we are talking about whether you should be investing in Bitcoin yet. Yes, we do see a potential bottom forming, but the big question is, should you be taking your buy orders yet, and how you should be thinking about this trend in the bigger picture. So when you compare the 2014 cycle to the cycle that we're seeing today, we actually have a different Elliott wave count. The 2014 cycle was a very clear A, B, C correction, and the cycle that we're having in today's cycle, the 2018 to 2019 cycle, is a lot more indicative of a WXYXZ cycle. So this is going to be all ABC subwaves, meaning that this has a bunch of ABC cycles inside of each wave in between the X to the Y to the Z. Each one is going to have ABCs inside of it. So this is what the subwave labeling looks like from the top of the cycle at around $20,000 per coin to the potential bottom of the cycle at around $3,200 per coin. As you can see, each wave has a similar subwave count to what we saw in the 2014 cycle, but they're just smaller. So this is an ABC, this is an ABC up, this is an ABC down, this is an ABC up, and this is an ABC down. The reason that this is important is you're looking for the last despair phase of the cycle before you can get the cycle to repeat and start a new wave on the upside. So this right here is a capitulation event or a despair phase of the cycle where the majority of the market got out and then the smart money got in. So this is where the dumb money is going to be selling and the smart money is going to be buying. I would not be at all surprised if that's what occurred right here when we capitulated from the 5,900 support failure all the way down to the $3,200 level. And the reason that we look for the Elliott wave count is Elliott wave theory actually has probabilities in its favor, meaning that if you actually can count the cycle properly and you know what waves are in place, you can have a high probability and a high degree of confidence that the cycle is over and that another one needs to repeat. Now the next question I get is, are we going to have a huge consolidation period similar to the consolidation that we saw after the 2014 cycle in between 2015 and 2016? This area right here. And my answer to that is to go back and study previous Bitcoin cycles and see what happened after they did their significant retracements. This was the 2011 to 2012 cycle, and we actually got very little consolidation. After the cycle completed, we started to pump. And we did get a little bit of a consolidation after we reached the midway point from the peak down. So from this top down to this bottom, when it hit the midway point, we consolidated a little bit. But the majority of the movement just started right from that bottom on and then began a new trend. So a lot of people are wondering whether we're going to have that happen again in Bitcoin or not. The easiest way for me to make sense of whether that's going to happen or not is to use the lowest points all connected together with a curve line on Bitcoin, because it's respected this line very significantly since it was added to the first exchange ever and traded from a penny all the way up to the $33 mark. So watching this kind of point in time, we could have a little bit of a consolidation period, but I don't suspect a consolidation period quite as big as what we had in the 2015 range, because we are so significantly above this curve line that it took a while for it to fall back onto it and the bull market to start again. Whereas currently we fell into this range quite significantly now, and it would surprise me if we went too far to the right before we actually start impulsing back on the upside. Now, if this line fails as support, we could see some further downside, even a retest of this major support level. So I have alternate perspectives on what's going on here. But the main thing you should do if you're aiming to buy Bitcoin is to use a stop loss. So let me get into that. If you want to buy Bitcoin today, the easiest way to reduce some of the risk of potential further downside is to use a stop loss. If we take our percentage tool over here on the left-hand side and then go from the peak down to the lowest point here, we have about a 20% range. So if you set some buy orders down here at support, maybe a little bit currently at current price, and then down next to the other support range, you're going to get an average entry of those 3 points, and you can set your stop loss below the average entry. So if you buy at current price and near the bottom and then at the center line, your average entry is going to be really close to the center point, which is about a 13% stop loss, which means whatever you enter into the market, the maximum you could lose is 13% of that. Now, if the market starts another bull run or even just goes up to the previous resistance levels, you're talking about the potential of a 50% gain. Or like I said, if we start a new bull run, we could go up to the next previous highs and even all-time highs. And from the current price up to the all-time high is about a 400% gain on Bitcoin. The best thing that you can be doing right now is understand that the crypto markets in the big picture are heavily undervalued, and this is around the third cycle that we've seen in Bitcoin that has had a retracement this heavy. Another thing about the analysis perspective is every single time that Bitcoin has failed an upward pointing trend line on the logarithmic chart, it tends to break descending resistance and then start another bullish cycle. This has happened twice now, and we're setting up for a third breakout in this downtrending resistance. So I'm watching this downtrending resistance very, very carefully. If we get significantly above that, I'm going to get even more excited for the big picture analysis for Bitcoin and the crypto markets in general. Either way, be smart about it, you guys. Don't go all in at once. If you're trying to get in on Bitcoin, use a stop loss, buy little bits, and don't jump the gun on anything. We could consolidate a little bit further. We could even drop a little bit more, which is why stop losses are useful. Or we could start a bull run currently and then have all of those juicy gains starting to come back into the crypto space. And that wouldn't surprise me at all either. So keep an open mind, have a trading plan for all directions. If you don't have a plan, then you're likely to fail in the markets. But if you do plan for the different outcomes, then that will greatly increase your chances of success. Anyways, thank you so much for tuning in today's episode. I hope that you guys learned something. Go follow me on Snapchat, links in the description. Follow me on Instagram. Smash up that like button, hit the subscribe button for more content, and I will see you guys in the next videos. As always, stay profitable out there.